Alrighty guys, what is going on? Welcome back to another episode. In today's video, I want to give my honest opinion on the new ETF, BUZZ, ticker symbol BUZZ. Now this ETF is really different than other ETFs. This is what you call a social and trending ETF. But we're going to be breaking down pretty much everything you need to know for investing in this ETF, a good strategy for it. So I hope you guys enjoy it. If you get anything in value, hit the like button and subscribe to the channel. If you guys have any questions or concerns, go ahead and ask them down in the comments. And if you guys want to learn more about investing in the stock market, don't forget to check out my course. And you guys can use promo code DIVIDENDS to get 50% off. We talk about fundamental technical analysis, how to find undervalued stock. We talk about taxes, dividends, REITs. We pretty much talk about it all, so I'll put a link to that down below so you guys can check it out. So now, BUZZ, here we come, roll the intro, let's go. Bam! So now before we talk about BUZZ, what is an ETF? This is a very, very common question, especially among beginners. Well, an ETF is pretty much just a pool of different holdings in it. These holdings could be a variety of things. It could be silver, gold, but most of the time it is companies, it's stocks. Now, the reason why a lot of people and a lot of beginners love ETFs is because if you wanted to individually buy these certain stocks, that could cost thousands of dollars, but instead you can buy a more affordable ETF that's only probably $100, but you're still diversified among awesome companies. But the beauty of it is you carry a lot lower risk because you're diversified and you still have a ton of reward because you have awesome holdings in it. Now, just recently we had a news article come out stating that there is a new ETF, BUZZ. Now, this is a little different than a traditional ETF like the S&P 500 because the S&P 500 cares about fundamentals, it cares about long-term growth, it cares about a variety of things, market cap, it cares about earnings, it cares about a lot of things. Just to get put in the S&P 500, you do have to have 4 consecutive profitable earnings and a market cap over $3 billion. But the thing about this ETF is that it's a little different. So now this ETF is algorithm based, so it looks up and searches across the most looked up stocks and most popular stocks among Reddit, such as Wall Street Bets. It looks at Twitter, Instagram, and a lot of other search engines, so they can look up the most popular stocks for that given time period. Now the beauty of it is recently we've had a ton of companies actually skyrocket up in value. Companies like AMC, we had companies like GameStop, we had companies like Rocket Mortgage. Now, all these companies would have been caught by this ETF, but there is a little thing you must know, is it does have to have a market cap over $5 billion, which honestly seems like a lot of money, but if you look at some of these companies, such as AMC, they did not hit that, but eventually they would have because those stocks would have squeezed up, but realistically you would have missed out on a lot more profit. So now, yes, that does concern me a little bit because of the very, very high market cap, but the thing about it is if they didn't put that, then you just have random companies enter this ETF. But now there is still a way that this company and this ETF carries a lot of potential. The reason why is because they have already a couple awesome holdings in it. They got announced, companies like DraftKings are in it, Twitter, Facebook, Ford, and Amazon are kind of like the leaked companies that are going to be in this ETF, which is honestly really, really promising because we have stronger companies, so we're still going to be diversified among blue chip stocks and risky stocks, which is kind of cool in my opinion. And another leak got out stating that this ETF is going to have somewhere around 75 holdings, which is honestly pretty decent because you're still exposed to a lot of awesome companies, and honestly there's still potential there and you're still diversified, which is fantastic. Now there is no news on is this ETF going to have dividends. It probably won't because this is really looking at short-term and smaller companies, and a lot of these startups here that we talked about, companies like Facebook, Amazon, DraftKings, Twitter, what they do is they don't give dividends because they want to reinvest that money back into the business and grow it larger and make the stock go up even more. Now, me personally, I really believe this ETF is going to be extremely popular, especially among millennials, because David Portnoy just came out and said that he is one of the investors in this ETF. So we all know his following, and I obviously believe there's going to be a lot of people that just buy this ETF just from him. Now, yes, there is no news on the expense ratio. It's probably going to be a pretty high one just because of the active trading. So you just got to make sure that it's under 1%, but it's probably going to be around 0.75% if I was going to guess, because of all the active buying and selling that this ETF is going to have to do, which is pretty high for an ETF because the S&P 500 ETF has an expense ratio right around 0.04%. So you guys can see the difference right there. So now, what is a good strategy for investing in this ETF? Well, I still believe dollar cost averaging this ETF will do extremely good because you can use the volatility that this ETF is going to have to your advantage. So instead of putting up $1,000, $10,000 all up front, what you will do is you will invest $100 a week over the next 10 weeks. So you still invest $1,000, but you spread it out into a longer investment period. So it gets a good average price for that time period. And obviously, anytime it falls, don't forget to average down because you'll make a lot more money in the future. And if it does offer dividends, make sure you have a broker that does have drip. But honestly, my opinion about this ETF is yes, this ETF is going to have a little more risk than a traditional ETF, but it's still going to be really, really fun to invest in. So I'll probably put a couple $100s in it and just see how it goes and probably dollar cost average it like I said. But obviously, don't forget, make sure you guys have, some other investments besides this one, such as the S&P 500 with ticker symbol VOO, QQQ, and some more diversified ETFs because this one is going to be a little more volatile than a lot of those. So I hope you guys enjoyed the episode, and if you got anything in value, hit the like button and subscribe to the channel. If you guys have any questions or concerns, go ahead and ask them down in the comments, and we'll see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care. Bam!